Hi everyone, my name is Anne-Marie Band. Today is November the 5th and this is the Moneyball Morning Report for the Benzinga Pro platform. Unless you've been living under a rock, you know that today is a heavily contested U.S. election. And my suspicion is that we're going to have ourselves a pretty wicky day. So here's the thing. I would anticipate that the edges are going to give us best opportunities. So here we're close to the edge of the bottom. 57.29, 57.28. A lot of traders are looking at this area to hold the near-term low. If we lose this zone, 57.90, 57.80, we could easily come down into that region. Very interesting. And the first thing that might happen is the traders lose the zone, sellers collapse in, and then it completely reverses. So this is what I think will happen if that is what's most likely in the formation. All right. So that being said, that's really all we want to look at from this perspective. We're going to look for longs coming into 57.28, 57.24, and realize it could be choppy there. If the shorts come in, you can pile in short, but to be sure, you're going to see buyers below pre-election results. Now, as the election results start to pour in, things are going to get really messy. Take the day off. Truly, I am not trading. I'm not taking one single trade in a live account. I'll trade some sim if I'm doing some statistical analysis, whatever the case, but no live trading for me today. I'm just not doing it. All right, here's what we have. That zone, where would we go to? Well, yesterday's volume point of control close, actually not yesterday, Friday's volume point of control close, 57.73. That's a great target. If there are a lot of sellers there, they're going to push us into 57.93, 5800. That's old liquidity areas. Absolutely fantastic zones to look at. Okay, now let's head to the NQ. Moving averages here, pretty messy. You can see we're caught between one liquidity patch and another. Down here at 20,000 and then up here at 20,242. Remember, not expecting savage sell-offs that don't bounce. Here's the problem. What is a savage sell-off? Last election, last election? No, not last. I don't even remember. One of the elections that I saw, there was a savage limit down, and it turned right around and moved right back up. So don't think, oh, support's going to hold here. Watch for it. Watch it stabilize. Once it stabilizes, you take it, and you take it into resistance. This is not a buy and hold or a sell and hold in the next couple of days. Not by a long shot. All right. Volume point of control sitting here at 20,083. That's been a pretty fair buy zone for a hot minute. 20,070 is the line I like. Value area low, 20,028. So if it dips down into that 20,000 zone, watch for buyers. Otherwise, formations look like buy the dip. They do. They look like buy the dip, but only into resistance. And where is that? First line of liquidity, 20,210. And then second line of liquidity all the way up here at 20,340. But the London low is 20,286 or so. All right, so that's basically the range that we're staring down. Again, practice trade today, right? Practice mechanical flow, following your moving averages. Don't trade in your live markets today. It could be very messy. Today, tomorrow, put yourself in study mode. All right, here we go. YM. Doing the same sort of thing, sitting down at value area low, 41,936. Look at this savage fade. Again, this is what I'm talking about. Liquidity ends up sitting all the way down here. It runs all the stops, and they're able to come in and buy, and now it's holding this base. So longs from 21,940 look pretty good. Listen, you probably only need about 25 points of risk, maybe 30, right? That's about $150 per contract there in the YM. And if it loses the area, easily we could collapse. Easily. Right? 41,791. Let's go to a daily chart and see what's after that. Liquidity, 41,683. So let's put that one right there. Old resistance, potentially new support. Value area high on the daily chart is 41,100. All right. Sideways action, that means the ranges are going to give you what you want. And don't hang on. See money, take money day. It's a see money, take money day. It is, absolutely. All right, let's take a look at oil. Good old Texas tea doing what we thought it would, right? Coming off of this 67, getting right here. Look at all this liquidity. Look, if it breaks to the north, it could break hard, but it's likely to come in and retest for long action or completely collapse back into the range. No idea. Yesterday, OPEC said that they were considering not releasing the curbs, and so that's got the price rising. I don't know. Everybody's playing games, and nobody cares about anything but their pockets. Just remember, it's all about the money in this game. It really, really is. Money and power. So here's what we're looking at. Dip buying formation. Look at how congested this is. My thought would be if it could come into 71.37, we could get a rise into 72.32. Again, see money, take money. Are we headed higher? Yeah, there's a pretty nice upward trend here. We've also got a rising wedge, right? And so that is, that's something else going on, okay? Buy the dip for sure in this formation, but wait for the fades because we could have ourselves some pretty good ones. So wait for the sweet spot. Here's liquidity down here at 71.22. Maybe that's where you put your wishing order if you're trading, and maybe you could get in at 71.30-ish. Add one more below there, and then your stop, 71.11. Right? Simple. Simple, simple. Gold. Still sitting in this range. It's Thursday, Friday, Monday, here's Tuesday. Really forming a base. Volume point of control is right here. Dips are but the bond market is also on the rise, so easily we could see ourselves a dip here. We could see ourselves a massive spike or a massive fade. These are going to be the areas that I think are going to show the most volatility in the next 24 to 48 hours. All right. And then, we'll see what happens. Okay. So that being said, dip buy. We're above all the moving averages, but we're in a highly volatile environment. So technical analysis gets a little bit weak because we have exogenous shocks. And exogenous shocks are shocks that come from outside of market action that jolt the market. Here we are looking at SPY. This is the only one that is sitting underneath its value area low. The only one. And so that we've looked at so far. And so the storyboard is, are they trying to find a base here and hold? Here's the thing. Liquidity action at 568. So if the buyers come in there off the spot, we're going to run it in to the higher congestion. This is a very sideways pocket. Very, very sideways. Trade light and tight or not at all. Here we have, 565 below. And if we take a look at the daily chart, we can see that we are inside the value area high with traders really trying to hold this floor. 565 showing up all over the place. So old resistance, new support. The daily chart shows that bounces are sell zones, okay? Every time we bounced into these prior spaces, it's been a sell. So that's what technical analysis is telling us right now. But again, technical analysis fails with exogenous shocks. Now, there are going to be a lot of people that are going to die on the hill and go, no, if you'd have done this kind of analysis, you would have seen that. Listen, that's probably true, right? Actually, that's the anchor of chaos theory. The anchor of chaos theory is that if you know initial value conditions and you have the right formula underneath, you're going to be able to predict the outcome. Okay? So good luck with chaos theory, students, because it's far too complex. But in any case, that's the underlying space. Yes, it's true. If you thought about X, Y, or Z, my voice is to the intraday trader that says, I don't want to lose. I need to position myself in areas that might go nicely. Palantir, which I believe is in the queues, obviously, has got a monster report out fairly good. Not sure where they're going to run into resistance. I think it's the big fat round number of 50, but it could be wrong. So we'll see what's going on there. And we will watch the cues here as it's well inside its value area high. Probably we expect it to get down into the volume point of control near 480. All right, everyone, that's it. Stay alert. Stay light, stay tight. There are other days to put your money at risk. Take care, and I'll see you on the streams.